What's up, guys? Welcome to Roensch Capital Charts. Today we're taking a look at the ever so popular S&P 500 ETF SPY, ticker symbol SPY, on a variety of time frames in anticipation of the next trading day, Tuesday, April 9th. All right, guys, so SPY here today, up 29 cents a share in regular trading hours. That's plus 0.06%. Essentially flat, just up a little bit here in the after hours. Either way, no matter where we finish out the after hours here tonight, take it with a grain of salt. Okay, volume is going to be extremely low. Now, let's pull out everything that the market gave us here today to get a grip here on SPY for tomorrow. We'll start with the volume profile analysis. We'll look at psychological levels. We'll look at trading levels, technical levels, options bias, the directional bias from the traders. And finally, expected move, because we have very much so a luxury here on SPY. Now, let's take a look. Starting with the volume profile here on the 5-minute, we'll look at these wiggles intraday and see what we can pull out if there's any bullish or bearish bias. The moves I'm primarily interested in, going to be that fade and pop that we got off the open, a fade and then more than a recovery there. And then intraday, kind of mid to late morning. Well, depending on your time zone, they could be late morning to early afternoon. We got a fade and then like kind of like a half, 2/3 pop. And that's really, that's kind of it that I want to look at today in terms of moves for the volume profile. Listen, by the way, if you didn't know, SPY is a daily upload here on the channel. Every single trading day, the SPY video hits at 6 p.m. Eastern time sharp. So if you have not done so already, please subscribe to the channel. It helps out tremendously. You have no idea. And SPY will be in your inbox every day, 6 p.m. Eastern. Now let's pull up the volume profile here and take a look. We have a very contextual open with that, a little bit higher volume than the rest. And then fade. By the way, we'll talk about this big candle. And then fade. Okay. Really nothing odd at all about that fade. And then like the little consolidation / pop we got near the bottom of that move. We did actually get a little bit of out of context volume on the bullish move. We got 2 consecutive out of context bars. For me, I usually look for at least 3 to 4 consecutive out of context bars to really assign a bias, but understand there is a very small amount of bullish bias there on the recovery that wasn't really there on the dump off this morning. Okay, now moving on to this intraday move, we had 1 out of context bar. For me, 1, there's too much of a risk of fooled by randomness, let alone a big bottoming wick, which tells me that that was a battle bar. We're seeing a lot of buying and selling volume, which does pump up the volume. So I'm not going to assign anything there. Throughout the move then, on that dump and kind of recovery, there's really no bias at all on that midday move. So we're left with just a tiny amount of bullish bias on the first move and really nothing, okay, intraday. Now, heading into the close, it's very common on SPY that last bar before the closing bell is a lot of volume. We got a lot of volume here today, nearly 5 million shares in a 5-minute bar heading into the close. But understand 2 things. Not only is it a battle bar with a large wick, a lot of buying and selling, we know a lot of institutional and fund rebalancing on SPY happens on the last bar heading into the close. With other stocks like Nvidia, Tesla, it actually is interesting. They tend to trigger the rebalancing, which is usually it's usually algorithmically driven after the closing bell. But on SPY, for whatever reason, it's almost always right before the bell and then a little bit after the bell. You can see that. So whether this is red or green, understand that a lot of times it doesn't really contribute to a lot of actual movement because you're getting a lot of buying and selling and it tends to sort of even out. So, needless to say, we can kind of ignore that last bar, unless it's a huge moving bar, of course. Now, let's move on here to the 30-minute chart. We can take a look at the self-fulfilling prophecy and psychological levels that I'm watching here, and a lot of the market is watching, especially on SPY, guys. With the charts like the 30-minute, the 4-hour, and the daily, that there's going to be a lot of eyeballs. You'll notice that my charts are very bare bones. All I have is the white, which is the 50 moving average, and the gray, which is the 200. The reason is because I believe all this, again, is a self-fulfilling prophecy, nothing more, nothing less. So I just want whatever has the most eyeballs on the most popular charts, and that's what we do. So if you guys remember Friday's analysis, we had just barely given up the 200 period after trying to reclaim it heading into the weekend. So the goal from a bullish perspective here on Monday was to hold the 50 and get above and reclaim the 200. Now, this crossover itself, to me, it's overhyped. It's meaningless. But what SPY was able to do is hold both of them. We reclaimed the 200 and held it. The 50 crossed over. Again, the crossover itself is meaningless, but all I'm interested in is holding both levels. And we did. We basically closed on top of on top of the 50 period here on the 30-minute, reclaiming both. So they're now very close to each other. Bulls, tomorrow, I want to see a hard high volume push away from both of these levels, holding the 50 period since it's the one on top now. Okay. This is going to act, or has the potential to act, I should say, as a slightly beefier potential support level. So you bears, you don't want to give the market any psychological reason why that should be seen as more than a first day hold for both of these, right? You don't want to start forming an uptrend where we're bouncing off the 50 period on the 30-minute. You guys just want to break back downside beneath both of these, ideally on high volume, get a low volume retest, and then boom, a high volume confirmation back downside, reclaiming that area as resistance. And of course, the 30-minute chart is quick. So especially like the 50, it'll move intraday tomorrow and change, from where it is in this video. So make sure you're paying attention in real time, especially on the 30 minutes, since these things move quickly. Now let's take a look here at the 4-hour chart, another really, really heavily watched time frame. We take a look here that, similar to Friday now, we're struggling to reclaim the 50 period here on the 4-hour. Again, today was essentially a flat day, but we rejected again off of that off the 50 period here on the 4-hour. We made a test and rejected. Same thing we did on Friday. So bulls, it's approximately, it would take probably about a 1/3 of 1% move, maybe about 0.3% to reclaim the 50 period minimum on the 4-hour chart. And it's time to do that as soon as possible. Okay, and since we're currently below, that would mean a high volume break, ideally a low volume retest, right? And then high volume on the bounce confirmation to kind of reclaim that as a support level with that confirmation bounce. The confirmation to me is very important rather than just a break and rip, because then, you leave a lot of doubt in the psychology of the market. Whereas bears, you guys, any retest of that 50 period, I don't mind whatever volume it wants to make the retest on. I really don't care. Okay, there's enough volume as it is, as long as the rejection is on. Typically, it's going to be higher volume if you get a real confirmation than the test was on. Right? If you're a bear, that's what you guys would want to see. That could set you up for a downside test of that 200 period here on the 4-hour. Now, let's take a look at the daily here. A few things to look at on the daily. First off, levels. Right, the psychological round levels, or round number levels, that I think the market itself is paying attention to. Listen, the obvious one to me is 520. When we're dealing with SPY, especially at the current price point, every $5 increment is a psychological level. So the big story here on SPY is really, I think, those 3 $5 increments. That's 520, 515, and 525. The immediate one for me is 520. Bears, you want to see a rejection, obviously, upon any retest of that region. Bulls, a reclaim, hold, and close above 520 would be a beautiful thing to see here on the SPY daily chart. Now, we are given a we're kind of spoiled when it comes to SPY. Because if you take a look here, we have daily expirations to look at. So the expected move on SPY by tomorrow's close is plus or minus $2.57 per share. Now that's priced in by the traders. Again, that's pulled directly out of the implied volatility of each contract. And remember, guys, the expected move is the expected volatility. By design, there's no directional bias in the expected move. But what that allows us to do is do the analysis, look at all the psychological levels, the volume profile, and then one more thing we're going to take a look at here to get the directional bias and start forming that in our heads. But that's only part of the story, because I know a lot of you guys trade options on SPY, and if you're unaware what the expected volatility is, what the volatility bias is, which by the close tomorrow is plus or minus $2.57 per share from the closing price today. Again, that's like the one standard deviation expected move, okay, plus or minus. That allows you to take your directional bias and then position yourself potentially much more effectively if you also know the volatility bias. Because if your volatility expectation exceeds that of the markets, well, then you can position yourselves maybe with purchased contracts and take advantage of that realized volatility being more than the expected volatility. And if your expected volatility is lower, for example, well, you can look to sell to open contracts or maybe even trade spreads, right? Like more neutral spreads that capitalize on realized volatility being lower than the expectation, right? Now, last thing we can do here for directional bias. What was the directional bias out of the chain today? We have 5.88 million total contracts traded, 2.57 million calls, and 3.31 million puts. So here on SPY today, listen, we are seeing a put side bias on the overall ratio as traders position themselves heading into tomorrow. Now, if we take a look at the short-term bets being placed, those short-term speculators, the gambly style calls and puts in that 0 to 20 delta range, those are those far out of the money contracts. We have 813,000 calls and 1.3 or so million puts. So we're seeing that bearish bias not only in the overall ratio, but also in the short-term speculator category. But again, remember, this is one factor of many, but we have a big sample size here, over 5 million, so I'm considering that. Listen, guys, again, if you get value out of these videos, please subscribe to the channel. SPY is a daily upload, 6 p.m. Eastern time sharp, every single day the market's open. I appreciate you guys, and I'll see you in the next one.